Hi, this is Karen Dice, Mortgage Currency, and I recently took a Facebook poll where I asked, what was the first thing you did when qualifying a borrower for a loan? Now, there were 96 comments, and 100% of the loan officers said that they run a credit report first. Now, I know I don't have to tell you this, but it's the first step to determine whether you're able to even work with them or getting them approved for a loan. And I'm sure you have seen enough credit reports and have some ways to help your clients increase their credit scores. But there might be certain things that are missed that can also help those scores go up. Now, I don't know if you saw the 60-minute TV show recently, but they did an expose of what happens when someone tries to dispute a charge or attempt to make a correction on their credit report, and all I can say that it wasn't pretty. They stated that the requests were farmed out to a call center. Some of the call centers were in India, and when 60 Minutes interviewed some of the employees in India, they claimed that they were instructed to do nothing. I mean, absolutely nothing with the updated information. In addition, the Consumer Finance Protection Bureau also has credit reporting agencies on their watch list. So if you go to their website, you'll see several press releases and rule updates that pertain to credit bureau abuses. Now, this class today is called Common Mistakes to Look For When Reviewing Your Client's Credit Report with Jim Hogle, U.S. Consumer Credit Restoration Association. He's going to share with you some screenshots of some of the common mistakes he sees day after day, and at the end of the presentation, thanks to Jim, you're going to be able to download a free report for your clients called How to Settle Collections and Request That They Be Deleted. So Jim, welcome, and I'd love to have you share a little background about yourself.
Hey, Karen, thanks for having me today, and I look forward to sharing some great credit tips and maybe some myths that may help you convert some of those credit-challenged buyers that are walking into your office and turn them into a pipeline of future home buyers. So that's really our goal. But the main thing I think people need to know today is that I had a mortgage company for 15 years. I know your business. I know exactly what you're trying to do as far as the loan approval process. And what we found over time is if you can improve the mortgage credit score, that you're typically going to improve the overall profile for all their credit purchases. So whether they're buying a car, getting homeowners insurance, car insurance, it's really going to help the client improve their profile and save them a lot of money on interest over the life of their loan. So, Karen, let's get started. Stop letting those people go out the door, and let's keep them in your door and get them some resources to help them with their credit issues. Next slide. Now, I just want to share with you some of the most recent data that I've seen coming out. This one is from January 31st, 2013. This is from Experience Decision Analytics website. I found this very interesting that 83% of consumers have checked their scores recently, and of that 83%, 42%, nearly half, want to improve their credit scores but don't know how. And really this makes a lot of sense. When a consumer gets a credit report, as you can see here, they've checked their scores, but they can't read it. Who can understand it? They only look at it when they want to buy something. So this is the first problem that we see. And you can help them with some of that. And today we're going to share some more great tips. Next slide. Here's another study that just came out February 11th, 2013. This is from the Federal Trade Commission. Now this study was 370 pages and was presented to Congress in December of 2012. It was just made public 2 weeks ago. 1 in 4 consumers identified errors on their credit reports that might affect their scores. 1 in 4. So you've got 20 to 25% of America, from what they found, might show that. And Karen, you had mentioned the 60 Minutes TV show. They also were talking about trying to get the errors fixed on a credit report and the difficulty in doing so. 4 out of 5 consumers who filed disputes experienced some modifications of their credit report. Slightly more than 1 in 10 consumers saw a change in their scores. So this goes on and on. The executive summary of this study was 6 pages. I mean, these 5 pieces that I pulled out are small slivers of the information that they actually found. Next slide.